Sehr geehrte Damen, herzlich willkommen.
Ladies and gentlemen, a cordial welcome to the presentation of the Wienerberger results. It's great to see so many of you here. Our Managing Board, Heimo Scheuch, and CFO Willy van Riet will present the results. Ladies and gentlemen, a very good morning to all of you on a cold winter day. Thank you for having joined us in such large numbers. I cordially welcome you to our annual press conference for the presentation of the results of 2017. As far as 2017 is concerned, we were able to present convincing results. For the first time in the history of the company, we have exceeded the 3 billion mark with our revenues, 3.1 billion revenues, the highest revenues ever in the history of the company. Moreover, EBITDA was increased to 415 million, which is a very good result considering the developments in the individual markets Wienerberger operates in. Highly satisfactory is the development of our net profit, plus 50% to 123 million. So this is our 10-year high. When you look at the figures, I should like to point out that after the crisis, we were able to achieve significant growth, an average revenue growth of 6% per year. EBITDA, 400 basis points, percentage points increase in margin, a very good development over the years. And when you look at our net profit, you can see a strong upward trend. So Wienerberger once again confirmed its growth path, which will be consistently pursued in the years to come. It's important to see that Wienerberger is growing not only organically, but in 2017, value-accretive growth projects were implemented. In the course of 2017, we negotiated acquisitions, we closed acquisitions, which will contribute approximately 90 million to annual revenues, and we expect a 16 million contribution to EBITDA from these acquisitions in the brick segment, but also in the pipe segment. We will be talking about the Preflex group later on and the underlying strategy, which will strengthen the Wienerberger platform. Some of these acquisitions are still subject to approval by the competition authorities. We are confident to get their approval, but it will take a number of months. Therefore, the contribution to revenues and EBITDA is not complete yet in 2017, and the 90 and 16 million expected are based on a full year calculation. Wienerberger has a very strong balance sheet. Our net debt, despite the acquisitions, was reduced by 10%. So this is thanks to our consistent financial management. So our net debt is low, our gearing is low, which gives us the necessary flexibility to grow in the years to come. As regards working capital, our performance was very good. You know that we have an internal threshold of 20% of revenues as our working capital target. In 2017, again, we remained below this threshold with 17% working capital, despite our growing business and despite our acquisitions. Again, this is due to consistent working capital management within the group. As regards our capital expenditure, we are very disciplined in terms of normal capital expenditure, as in previous years and in 2017 as well. Wienerberger is highly consistent as regards normal CapEx, and this represents a stable percentage of revenues. Our asset base, our industrial activities, and our industrial platform remains competitive. On the contrary, we are doing future-oriented, forward-looking investments. We are continuously improving our plans for further growth. Another important point for our company, and that I would call the DNA of Wienerberger, we are continuously working on costs. We're working hard to cut costs. Again, we succeeded in doing that in 2017 because we consistently pursued small projects, small steps in production, in administration, in sales. So it's always about optimizing processes, and the contribution of these small initiatives added up to 11 million of savings. So we even outperformed our target of 10 million savings. So we are consistently working along these lines, and we will do so also in the future. Ladies and gentlemen, a company like Wienerberger, which operates in 30 different markets and has 16,000 employees, has to set clear sustainability targets. In the building materials industry, we are one of the leading companies when it comes to defining where we want to go in the coming years. I've only singled out a few areas that are important. Of course, with 16,000 employees, most of them working in factories, health and safety is particularly important. Every single accident is one too many. We engage in training activities. We invest a great deal. We support our employees so that occupational accidents can be prevented. In terms of products, our target is to have 25% of our product portfolio qualified as innovative products. We've already reached this target of 25% of innovative products, and we will consistently work on further improving in this respect in the years to come. In production, we are making every effort to reduce energy consumption. We have reached some of our targets. In other areas, we are still working. We've set ourselves ambitious targets within the framework of the 2020 Sustainability Roadmap. Recyclability is another important point. Use of recycled material in brick production, in plastic pipe production. We are making progress, and we are pursuing our ambitious targets. And then, finally, the issue of social responsibility. To single out just one point that concerns corporate behavior. We have very high ethical values, and we assume social responsibility very clearly. As a listed company, we have to generate an attractive return for our shareholders. Our dividend, according to the managing board's proposal, will be increased to 0.30 euro per share. That is a year-on-year increase of 11%, but we're also going to pay out a special dividend of 10 cents. Mr. van Riet will tell you more about that. And as we announced at the end of last year, we are now running a share buyback program for the buyback of up to 1.2 million shares. Those are all very specific measures. When you look at the total shareholder return, it's 24% in 2017. That is a very good return. If you look at the past 5 years, the return is well above 200%, and this is above the market average. So investing in Wienerberger is attractive for shareholders. By way of summary, in 2017, we consistently executed our strategy. We pursued our growth path. We took specific measures. We implemented these measures. We pursued the sustainable development of our operations based on continuous optimization. And finally, we delivered a very convincing operational performance. And with this, I hand over to my colleague, Willy van Riet, for the detailed figures. I too would like to welcome you cordially. A quick overview of the key figures. Revenues up by 5%. We are now at 3.1 billion. That is a very good performance in mixed markets, I would say. And when you look at the figure like for like, our results are really good. The same applies to EBITDA, a 3% increase as compared to the previous year, but compared like for like, and I will say more about that later on, it's plus 7%. And this gives us a net profit up by 50% compared to the previous year. This is due to better operational results and financial results. We changed over our refinancing regime, which ultimately gives us a 50% increase in net profit. And last but not least, this is something I'm really proud of. Despite our growth, despite the acquisitions, we succeeded in further reducing our net debt, 1.4 times EBITDA to net debt, and the net debt level was reduced by 10%. Now, the reconciliation of our revenues, 3% growth in volume. We succeeded in implementing 2% price increases in a market or in markets with very, very little inflation. We also have a positive 1% contribution from consolidation, that is newly acquired companies. And of course, we also had headwind. We had foreign currency effects from the pound sterling, from the dollar, from the Turkish lira. In Turkey, we are active with our pipe business, but like for like, we delivered 5% organic growth in revenues and 2% in price increases. When you look at the activities, we had a good performance in Western Europe in clay building materials. Germany is slightly lagging behind. Pipes and pavers in Western Europe, good results. Some international projects did not work out. Nevertheless, we have a good, sound development of results. When I look at Eastern Europe, satisfactory growth, above all in residential construction, and a good result in pipes and pavers. In North America, when you look at the figures, you will see in a like-for-like comparison that we delivered a strong operational performance. Now, organic growth, like-for-like, what does that mean? I already said 7% growth. With this calculation, we exclude the proceeds from sales of non-core assets, 22 million in 2017. We did restructure also in 2017. You know, we are a company that takes the necessary measures, and one of our problems in 2017 was the French pipe market. We did take a measure there, which accounts for almost 12 million. It had to be, the comparison had to be corrected for that, and then 5 million EBITDA losses. This is a pure translation loss, a conversion loss, 5 million. It's not an operational loss. And the contributions from the new acquisitions is 1.3 million net. This is not much because most of that happened in the second half of the year, and we were not yet able to realize the full profitability. But as you saw before, we expect an EBITDA contribution of 16 million for the full year. Now, here's the income statement in somewhat greater detail. EBITDA 415 plus 3%. Depreciation and amortization went up, 30 million special depreciation. We look at our industrial portfolio every year, and we had some plants that had been mothballed since 28. Some of these plants had been mothballed for a very long time, and we came to the conclusion that it's better not to invest in the mothballed plant, but in those that are operational. It's more profitable and it costs us less cash, and this is why we have higher depreciation. Of course, in the future, we may be able to sell these plants. We also booked an impairment, and in Steinzeug, our ceramic pipes, we also had we had to book a slight goodwill impairment charge. The financial result, 33.8 million. This, in a way, contradicts what I've been saying so far, but look at the item hybrid coupon, which went down by half. At the beginning of the year, we redeemed much of our hybrid bond, and we integrated it into current financing. And when you look at the sum total of the two, that results in a significant saving. And then income taxes, relatively low, as you can see. Now, according to IFRS, tax loss carry forwards have to be capitalized when you reach profitability, and this happened in our case, including in North America. So therefore, we do have a positive contribution to results from deferred tax assets. Now, in net terms, when you look at the positive and the negative elements, the impairments and the assets, they offset each other, and the net result of 123 million is indeed comparable to can indeed be compared year on year, and this gives you a 50% increase. Cash flow, gross cash flow, is slightly below the previous year's level. This is due to slightly increased interest rates, and it's due to the fact that in some countries we're paying higher taxes, so we have a capital outflow there. Working capital, minus 30 million. Why minus 30 million compared to plus 15 million last year? We took a big step in 2016 In terms of working capital, we had a major cash in at that time. This year, we were able to further improve against the 17%, but our revenues went up. So we need a bit more working capital to support our current business. Working capital can only be sold once. 17% is very low already, a very good performance. And the same also holds for normal capex, 147 million. This is clearly below a normal depreciation and amortization. Divestments, we regularly sell real estate. Why not as much as last year? Although we have the same contribution to the results, there are a number of projects that were done at the end of the year, and the entry in the land register hasn't been made yet, and the payments only came in January and February. This is because of the year-end situation. So we have a free cash flow of 152 million available for growth capex. We have a slight increase in growth capex. Year on year, some projects have already been implemented. Others are in the process of being implemented. And the dividend and the hybrid coupon is still on the full hybrid bond, which we had in the past. This is why it's still relatively high in 2017, but the cash savings will materialize in 2018. Our balance sheet ratios are very strong. They were strong in the past already, but we see a slight improvement there. And net debt to EBITDA is down to 1.4. Our financing structure is well balanced over the years. This year, a bond of 100 million carrying a coupon of 5.25%. This will be refinanced on better conditions in the course of the year, and the rest is very well balanced. And finally, the dividend. As in the past, we continuously increase our dividend. This is our dividend policy, and we pay out this dividend this time an increase by 11% over the previous year. We want to keep our dividend in the range of 10 to 30% of free cash flow after the hybrid coupon, and we succeeded in doing that. As a company with cyclical operations, we shouldn't pay out too much because, after all, we need the funds for growth-driving projects. And then a minor share buyback operation has been initiated. We intend to buy back approximately 1% of the shares. The program is running until the end of the year. And from the ANC Private Foundation, this is a foundation that was set up in 2000 to manage non-core assets of Wienerberger. And here again, we sold non-core assets, and we are distributing all the surplus cash to all Wienerberger shareholders. So the shareholders are the beneficiaries of this foundation. Thank you very much.
Thank you very much, Willi. Now, after the detailed figures, I'd like to draw your attention to what's going to happen in the coming years. Over the last 5 years, we've been able to build very strong industrial platforms. So we are leaders when it comes to infrastructure, residential and renovation markets in Europe and also in North America. We can build on these platforms and expand further. In addition, we have managed to recruit experienced and capable local management in all these regions, and growth can actually be implemented. And ultimately, we have moved away from a purely production-focused enterprise to one that shows customer orientation and innovative products in the individual markets, so that, again, growth can be achieved. When we look at the regions where growth is possible, we have strong organic growth. I mentioned that we had an annual growth of 6% on the average. We focus on operational excellence. We are clearly determined to improve our performance. 11 million savings in 2016. As a result of all of these measures, which we will intensify further. And then we have a third growth pillar, the growth projects, which I've already mentioned, with the individual focal points. So let's take a look at organic growth. Here we have managed to introduce a large number of innovative product, services and solutions. 25% of our revenues come from innovative products. Also, we have increased the market proximity, and we use digitization in order to improve our presence with our end customers, architects, builders, etc. Let me just give you one example. The insulation-filled clay block, which was introduced in Germany about 5 or 10 years ago. Now it is being sold throughout our group. We are strong in Austria, the Czech Republic, Poland, and also Switzerland and France, where we will introduce this product. This is the result of a very consistent organic growth strategy. Of course, it is important to have continuous evolution and improvement, not only in the production area. This means saving costs, optimizing processes, and I've already mentioned that because of sustainability, we need to improve energy efficiency. Also, we will be active in research. We will cooperate with universities and research institutions. All this should help us maintain a lean organization. So we have a sustainable corporate strategy. It's part of our activities. We focus on training employees, on developing our employees. We, as Willy van Riet pointed out, of course, we invest in the industrial area, but we also have to invest in our employees. So this is something that we are going to do. We will also focus on digitization. Environment is a very important aspect. So we will focus on recyclability, and you can see that we have been able to reduce energy consumption. Something else, of course, is important. We need to build on this basis, but we have additional optimization targets for 2018. We want to become even more efficient and save costs. In addition to the 10 million of cost savings, we want to take further measures in France, in Germany, in Austria. So there will be a further increase of efficiency and further cost reductions. So together with non-recurring costs of 30 million, we expect to have savings of 15 million in 2018 and 20 million in 2019. So this is a clear commitment to further increase our efficiency. Of course, we will also focus on the sale of non-operating assets. Let me just point out that we had a successful program in the period 2012 to 2016, where we generated total proceeds of 93 million. And the target for 2017 to 2020 is total proceeds of about 70 million. 40 million of proceeds have already been achieved in 2017. So we focus on selling non-operating assets. Gains on sales are expected predominantly in CBM Europe, and the positive economic situation in this region makes this possible. One of the crucial points for further development is the reshaping of our portfolio. We will focus on high-margin businesses. We see attractive pipeline of growth opportunities, and of course there will be strong financial discipline with clear criteria. We will focus on technical simplicity. This is going to be a long-term trend in the industry. There will be fewer and fewer qualified people, and therefore we need to find intelligent solutions, and we must focus on technical simplicity. This is one of the crucial criteria for mergers and acquisitions. Also, we are a multi-local player. We speak our customers' languages, whether it's in Italy, in France, in Russia. That is to say, we have strong local brands, products for the local market. This is one of the essential characteristics of Wienerberger. We manage to deal with thousands of customers in local markets, plumbers, electricians, or builders. And we are a trusted partner, a reliable partner. Wienerberger not only provides products, rather it also has the competence to process these on the building sites and to implement projects. We are the first supplier that managed to play an essential role as a supplier in the United Kingdom, which meant added value. This is what we plan to do for the future. Let me just give you an example. Preflex in Belgium. This project meets all these points that I have mentioned. Technical simplicity. The installer can work faster, and this applies both to new housing and to the renovation sector. We work on local markets in Sweden, in Norway, in Finland, and also in the Netherlands. We can place these products on the market, thus create a broader platform for the new product. So again, we act as a reliable, trusted partner. This is going to be the growth strategy of Wienerberger. We want to build on our existing growth platform in the local markets by focusing on partners who have the necessary experience there. For this year and the coming years, we already have attractive opportunities, growth opportunities, because we are in touch with a number of family enterprises, most of which are small but are highly efficient and fit very well into our group. And they are also interested in benefiting from Wienerberger's corporate culture. And finally, we have a clear commitment to strong financial discipline when it comes to mergers and acquisitions. The CFROI is our key financial criterion. It's above 11.5%. Why CFROI? Because, as you know, shareholders and we as a company want to be quite clear as to what the benefit of an investment is. There must be clear and absolute transparency. So, capital employed is what we have paid, what we spent. And this is reflected in the CFROI. So we have been able to make things transparent, both within the board, in the production sector, and also towards the outside. This is a very important aspect of value management. Now, it's not enough to improve efficiency, to be growth-oriented, and to show good financial performance. We also consistently monitor our portfolio, both in terms of strategic fit and future returns. And unless the criteria are fully met, we will be focusing on disposals of more than 100 million euros, because we want to be more efficient. So we are thinking of approximately 100 million euros in terms of disposals. So, summing up, we have a strong industrial platform in our core markets. In Europe, in North America, we have experienced and capable local management, and we are focused on customer orientation and innovative products. Now, the growth drivers for 2018. First of all, markets are differ. There is a certain amount of volatility. Basically, we are optimistic for this year, but there are a number of topics such as interest rate policy, political developments in Europe and outside of Europe. All these factors will affect the markets. Wienerberger wants to outperform the markets where we are active, and we want to have strong organic growth. But, as I said, markets differ. Secondly, we will focus on optimization measures in order to enhance our revenues. We will make acquisitions that mean added value. We already have certain amount in sight, and also we will dispose of non-core elements in order to optimize our portfolio. So, when it comes to the outlook for 2018, we will continue our growth policy, a like-for-like EBITDA of 450 to 470 million. This is the range that we have in mind, because there is volatility in the markets, and also we have already planned certain measures. Some of the takeovers or acquisitions will perhaps come a bit later than planned. Also, we need to consider labor law provisions and regulations. So the range is 450 to 470 million EBITDA. Normal capex, again, here we will be very careful. About 160 million, our asset base, of course, will increase, and this may require additional normal capex. When it comes to growth capex, we are thinking of 200 million. We have already taken a number of preparatory steps last year, so we think that the 200 million should be possible. So this was a very brief summary and an outlook. It clearly shows that Wienerberger is on a growth path. Thank you very much for your attention, and we are available for questions. Thank you very much.
I have a question regarding your saving targets. Did I get you right? You are planning to save 15 million this year and 20 million next year. You said that this also concerns Austria. Could you specify that? Could you tell us if you're planning to shut down additional plants on Friday? We heard about 2 small plants being closed in Burgenland and Styria. So how many plants do you intend to shut down in the coming 24 months? As regards Austria, we have indeed shut down 2 small plants in Styria and Burgenland. The employees, 22 employees, are concerned by these plant closures. The production sites are of no strategic importance for us, and there is a scarcity of raw materials. In recent years, we did build capacities in Austria in order to offset the closure of these small plants. We took over the Brenner brick plant in Carinthia, so we do have capacity reserves. And as I said yesterday, in terms of sustainability, we are focused on saving energy, on reducing energy consumption, and old plants that do not allow for a sufficient degree of automation and where the firing process is not up to date are to be closed. So as regards Austria, there will be no further measures in production, but we're going to optimize in all other areas. But as regards plant closures, no more than the 2 mentioned. Currently, we have approximately 200 production sites. In Austria, let me think, I want to give you the correct figure, 15 plants in Austria, 1,165 employees are working there. That was the figure from the end of 2017. Another question? Erste Bank. First of all, congratulations on the excellent result. I have 2 questions. Mr. van Riet, you mentioned the problematic French plastic pipe business. What kinds of measures have you taken there, and when do you expect to see an improvement? Well, the measures were initiated already last year. The French market is characterized by a lot of overcapacity, a supplier structure which is determined by two major distributors that get capacity from Spain and Italy. Pricing is aggressive, and Pipelife was active too much in the commodity area. So we withdrew progressively from the commodity area in 2017. We narrowed down the plant or production base, and we are approaching an improvement. Growth investments have gone up significantly year on year, 25 million in 2016, 85 million in 2017, and you are planning for 20 million in 2018. So what kinds of transactions or targets do you have in mind? Well, I'll let Willi answer that. What you're saying is true. We increased a growth capital expenditure to 85 on a budget. We didn't spend all of that because some of the projects were moved to 2018. Brenner was closed at the beginning of this year. Romania is still subject to approval by the competition authorities. We hope the transaction can be closed soon. And in the course of the year, the minorities which we still hold in Tondach, we intend to buy them. And we have a number of growth projects aimed at improving and enlarging capacities. We will build new production lines. We looked around and to see where the costs of additional capacities are lowest, and this will take up about half of the 200 million. And we do have projects in the pipeline. This is our current assessment, and we're going to update that continuously. Yes, we are planning for a large number of smaller steps. Sorry, we can't hear the question because the speaker is not using a microphone. Currently, we're starting up existing capacities in Hungary and Romania, Czech Republic as well. So there is a positive environment in Eastern Europe, and we're taking advantage of that. Measures were also taken in North America to start up capacities again. So this is happening across the Wienerberger Group. If there are no more questions, I look to the first row. A question coming in via the internet, perhaps? No questions. So thank you very much for your attention. Enjoy the rest of your day, and thank you for having joined us today.